In this video, I want to quickly show you two live examples of trades that we got at the Potential Miners International Trading Floor. And of course, these examples, they are examples of one of our cash flow uh, trading model. And of course, that is what the one that I did example of this, in the last video I did, and that is the news release framework. This is where we follow the news data, the news uh, data release, and to position for profit making or profit taking in the market. I want to quickly show you how I took these two trades, how these two trades played out, on a step-by-step, approach. In fact, one of the trade is still running, and of course, the outcome we don't know yet. But then the other one has already, played out. So let me quickly show you this. The first one is this GBP card. But then before we dive into the chart, let's go and check what the data looks like and how we actually made our selection and decide on what to do. So today is Friday 29th of August, and the news was released around 1:30 p.m. So the first one we want to trade is, or the first one I will show you, because this is already a running trade, is the news release for GDP month on month for Canadian dollar. I want you to pay close attention because I just want to, do a brief overview of how we understand the data set and how we, pair, currencies with the currency with the data release, and we position for entry in the market. So the first thing we do is we look at what is the previous data as regard GDP month on month. The previous data was minus 0.1%. So which means that the Canada economy is experiencing a disgrowth of minus 0.1% when it is evaluated on a month-on-month basis. You see, and of course, the forecast happens to be 0.1, which means that the analysts and, of course, expert analysts and investors, they are expecting that Canadian economy or Canada's economy should do better when it comes to GDP month on month, moving from minus 0.1% to 0.1. And of course, that is the forecast. So, but when the data was released, it was obvious that the economy, performed lesser than expected, which of course is still maintaining the minus 0.1%. And this is a bad signal for the price of Canadian dollar. And of course, that is our concern. What will be the price for Canadian dollar? What is the implication of this data? So this is obviously bad for the price of Canadian dollar. And of course, we now want to ask ourselves, what is the currency pair that we are to compare or to pair with this Canadian dollar before we can now probably now go to the chart to take position. So from our robust analysis, we picked GDP, um, GBP, I beg your pardon. So GBP now, Great British Pound. So that's what we picked, and of course that was what actually got us to trade this pair, GBP card. So the way we trade our news at Potential Miners International is just to relax. We are not to panic. We have set of rules. And of course, like I said, and I will always repeat, your expectation or what is expected of you as a forex trader is that you should trade with your set of rules as if you are a robot. That is the expectation from you as a forex trader. You are not to be trading based on you feel, based on emotion, based on probably what other traders are saying. You see, so what we do at Potential Miners International is, of course, before the news release, we have our preliminary analysis that we do. This is where we pick likely pairs, based on the data that will be released. So we pick pairs that will trade. If the data release is bad for the currency, and we pick another choice of data, currency, I mean to say. So we pick currencies that will pair with the particular currency that has the data release. So in this case now, Canadian dollar. So we do our preliminary analysis, we pick the currency pair. If the data is good, we have list of pairs that we are going to trade based on our preliminary analysis. If the data is bad, we have pairs of currencies that will trade based on our trading condition. Of course, so and of course what we still do is we analyze the average stop loss that we put on the trade, regardless of whether the data is good or bad. So we have done all of that, and of course, once the data is released, the data was released around 1:30 p.m. I want you to follow me closely. I've said this in news related videos that I've released, but then in case you are not getting it, let me still say this again. It's just a step by step way, of trading the news. You don't need to jump into the market immediately the news data is released. So what we do is we wait for, the data was released around 1:30, that is 13:30, based on this timing. So 1:30 we wait for average of 10 to 15 minutes before we look for our position. So after 5 minutes, that's 13:35, 13:40. So after this candle close, usually what we do is after the 10-minute candle close, in between 10 and 15 minutes, we'll now look for either of any of these three things. You are looking out for the fair value gap created by the news data that was released, or an engulfing move, or another block. Let me repeat this. After 10 to 15 minutes of the release of data, you are looking for a fair value gap that was created by the pricing in of the data that was released, or an engulfing move, or another block. So in this case, the data release created a fair value gap, and that is what we marked. This is our area of emphasis now, or entry box, as the case may be. Entry box. Okay, now so now what we do usually is that we position our trade. We already analyze that the stop loss for this particular trade will be 15 pips. That was our analysis. So we position, you are supposed to, you see this fair value gap, you are going to position your trade below the high of the fair value gap that was created, and our stop loss was projected to be 15 pips. And of course, we are targeting ratio 1. You can see that this trade has already done ratio 1 to 2, and of course this is where we break even. So even if this trade eventually comes back, it's going to just stop us out at break even. So for this trade now, we are currently risk free based on our trading system, you know. So but then you position and take ratio 1 to 3. This trade has not delivered yet, but I'm going to, the next example I'm going to show you is for the USD, Euro USD, and of course that was because let me quickly say this. Now, if this trade eventually comes back, given that you have done ratio 1 to 2, this trade is not expected to still stop you out as stop loss. You are supposed to have move your stop loss to somewhere around the entry position like break even, so that you will be risk free on this trade. But however, it has already done ratio 1 to 2, but that is not our target. You are not to close the trade until it does ratio 1 to 3. Remember that you cannot determine the outcome of a particular trade. So what you can do is to set your parameters and trade your rules and wait for the market to do the magic. If you begin to cut your profit short, it will affect the hedge of your trading system. Note that your your decision or conclusion of whether your trading system is profitable or not will be based on 20 trades. So, in fact, I did a video yesterday and it was a live trade also. That was, I think it was USD JPY or so. And the trade ended up, a losing trade. So it doesn't matter what a particular trade does. What is important is that you have your hedge defined. And that is the benefit of trading with a system, not a strategy. So at Potential Miners International, we have a trading system that incorporates all these things, the risk management, the psychology required for each of the trading models, and how to really structure your capital to trade in the financial market. So, but then that being said, let me show you. So this trade, we are expecting it to come back and deliver ratio 1 to 3. Hopefully it will do that. However, we don't know what the market could do. Anything can happen. Just like the trade I did a video with yesterday, it was already in profit and it just turned back and stopped us out. And that's just one of those things. So let's go. Let me pay right Euro USD, and I will still show you how what we analyze for that. What we analyze for that. So now look at this now. We have a news that was released. This is called PCE Price Index month on month. Now this release, showed that this particular index, is the same thing. Compare the forecast with the actual. So we have 0.3% for the previous, and the forecast was 0.3%, and the actual eventually, was 0.3%. And of course, trading Euro USD, we already know. Look at this now. We already know that the overall directional bias for Euro USD is a buy. So on that premise, we know that given that this is still the same thing, USD has the likelihood to lose strength. So we position and observe what the market will do for us. And of course, let's just follow it just like we did for the other one. Look at it now. The news was released around 1:30. So we waited 1:30, 1:35. That's 5 minutes after the news release. 1:40. That's 10 minutes after the news release. So after 10 minutes, we are now looking out for order block, engulfing move, or a fair value gap. And we got an engulfing move around 150. So this is now our entry box. Entry box. This is how you will just be trading the market. There's no emotion. It's not as if you feel like or you don't feel like. So we got the engulfing move here, and expectedly we are to set our and the 15 pips was our stop loss projected in preliminary analysis before the data release. So we set your entry to be slightly below the high of the entry box. Then 15 pips should be around 15 pips. So and you take your position. You see that now. So this trade has already cashed out. If you look at it, is I think is less than, let me see on the 1 hour, within 1, 2, 3, within 3 hours. This is within 3 hours, and this is the benefit. This is one of the benefits of trading the news. When you trade the news like this, you will have a lot of volume, within a short period of time. And this model is just one framework of our cash flow, model at Potential Miners International. We still have like two other models. We have the investment model, where we trade the daily and the weekly impulsive wave and with cash ratio 1 to 6. And we have the project model where we trade the monthly wave and with cash ratio 1 to 18. So, but because we know that if a trader could not get a trade, and probably you need money, you might be bent on entry, the market even when your conditions are not met. So we created a cash flow, model, and we have two frameworks in this model. And one of these is which one? The one I've used to explain to you is the news release framework. And this is how we trade in the financial market at Potential Miners International. And of course, the essence of giving out this video is to probably, to help one or two, forex traders that are struggling. Whether you like trading the news but you have been struggling with it, you can just listen to this video over and over and see if you can really get what I'm saying. However, if you feel you don't get what we are saying, probably you feel you really need, extended explanation on this particular trading model or trading style, you might need to reach out to us. You can just reach out to me on the comment box and I will, of course, respond to you. And of course, till I see you in the next video, uh, thanks for listening. I remain Mr. Akimbode, the King of Waves. God bless you.